from alliances, we move to conviction and how diversified capital is put to work with intent. Here, we're exploring how investors allocate capital across sectors, from venture to institutional, with conviction and clarity. Joining us in this discussion are Michail Samawi, Senior Executive Officer and Group Head of Asset Management at ENBD Asset Management, Mohamed Elakhdar, Managing Partner at Square 40 Limited, Naif AbuSaida, founder of Hakbah, and moderating this session is Jayda Shoukry, content producer at Forbes Middle East. Ladies and gentlemen, put your hands together for our speakers.
Investors nowadays face a massive challenge. They need to look into the future, and this means that they have to have massive conviction, believing that whatever strategy they pick today remains relevant for possibly years to come. When they're deploying capital across sectors, across geographies, this can become a challenge. So I want to dive into the first question. Looking from the perspective of a founder, you're going to rate the investors right now. How does patient, conviction-driven capital offer impact in a much more approachable way compared to opportunistic funding, especially when you're scaling in the region?
Hi, everyone, and thank you for hosting. In real world, most of the founders, they don't have that luxury to choose. They're choosing money. Whenever the money is available from the investor, they take it. And that's part of the situation, I hope, as a founder and with my fellow founders as well, to be changed. And differentiate between the smart investor, everyone talk about, we're looking for a smart investor, to look for the right investor. Being right investor for founder is more important than have smart money or a dumb money, a silent partner or an active partner, doesn't matter. What fit with your strategy at this stage, it will take you to the next stage.
It's matchmaking. We should make you guys an app. You'll just match with the investors. But now, speaking of investors, how do you balance diversification with conviction when you're looking to unlock long-term value across sectors and geographies? Michail?
I think the most important thing is discipline. That's what I think is really important. So 80 to 90% of actually your performance as an asset allocator is an asset allocation call. And only 10 to 20% is actually security selection or company selection. So, I mean, security selection or being able to attract the right company is actually overrated. You have to have a disciplined approach where you can actually understand what the global market is actually trending toward, and based on that, you build your own asset allocation. We called it in our asset allocation part, strategic asset allocation. Have a conviction on industries, sectors, asset allocation, geography, and from there you build your portfolio. So a core satellite approach is very important. A beta and a portable alpha is something that we do and we do in every day. So being disciplined, having a risk framework that actually understands risk and return is extremely very important. And by the way, from an institutional perspective, which is the other side from the equation, they actually appreciate consistency more than returns, which means downside should be more protected more than the upside as well.
Absolutely. Now, for Mohamed, we have quotes. We've tracked, your activity, and you've described MENA as a growth laboratory rather than a frontier market. How does this shift away from investors? How does the change in thinking really affect capital deployment, shift your regional strategy, reshape the market?
It's a great question. So I think when you start looking at the MENA region as a growth laboratory, you need to start changing your perspective from being an investor in a single project or a single asset to more looking at building a platform. So, and then from there, you need to have much more of a longer-term view on your investment horizon. So a typical fund life does not necessarily make a lot of sense. So you need to, your long-term value creation is basically what compounds the returns. And when you start looking at this longer-term horizon, that's when I think strategic alliances with governments and sovereign entities to utilize some of the capital basically to support the long-term compounding effect of these projects starts making a lot of sense. And I think we've seen it a lot in initiatives like AI. So you've seen the initiatives by G42, by Khazna, by the big initiatives for the hyperscalers across the GCC in Saudi, Qatar, and the UAE. On energy, you've seen initiatives from Masdar, from
Aquapower.
Taqa in Saudi Arabia, from Diwa, and then other initiatives like healthcare. You've seen Pure Health, where you start building a platform, not a single domain, where you start integrating, care with diagnostics and aftercare and all that. So,
now I know this panel is talking primarily about conviction, but I'm curious, Naif, what are the qualities you look for in an investor, especially when you're aiming to build the sector, build the ecosystems that were just mentioned, rather than just focusing on portfolios?
Do we have any founders between the audience? Good. 1, 2, 3, 4, 5, 6, 7. That's good numbers. Did you ever rejected an investor? 1, 2. You reject money from the investor. Why?
Third.
The valuation. Okay. Other than the valuation? Okay. The difference in the vision. And this will answer, to a certain extent, the question about how they're strategically aligned between what the investor is looking for and what the founder is looking for. Shall the founder will care about the exit for the investor, or this is the investor rule? What do you think?
Investor.
Investor. So I cannot present a pitch deck to the investor or the investment firm and add a slide about exit strategy. That's wrong. When I built a startup, and every founder built a startup, he built it to last. It might be acquired or to be acquired by a company or get an IPO or a private equity, but that's happened as a business grow. So you focus on the growth, you focus on being embedded with the ecosystem to find the real unique selling proposition and build on that.
It definitely requires that cohesion, and they definitely need to be along with you for the ride, for the entire journey. They're not exiting halfway through. Now, this brings me to a very important question as well. How do public and private market allocations complement each other today in building resilient, long-duration portfolios?
I think the most important thing is to look what we call total portfolio approach. And when you do the total portfolio approach, you will see how complementary is private and public. I'll give 2 examples. In the equity space, in the company space, only 1% of the companies worldwide is public. 99% is private. If you actually focus only on the public side, you miss 99% of the GDP, correct? And you will find, by the way, sector strategies and geographies that otherwise is not available in the public side. So that's why when you think about total portfolio approach, you will understand how you can mitigate sector geography by investing public-private. I'll give another example. Credit. Almost 1 out of 6 companies can finance themselves from banks. Only 1. 5 is actually being financed outside the banks. If you only focus on the 1 out of the 6, you'll also think about only large part corporate. But what about medium size? What about lower market, upper market, middle market? All of those are not covered by the banks. So when you think about credit, you should always think about public and private as a complementary solutions. And the final thought from my side is when you allocate to have exposure to risk premia, we call it, correct? I mean, illiquidity risk premia is only available in private. And then value is only also available in private, and also growth is only available in private. So sector allocation will be complementary if you invest in private versus public.
True.
You're stealing my next question because I wanted to actually ask about sectors. As capital moves from being purely financial into something that's more strategic, which sector lenses, whether we talk about things like AI, infrastructure, the energy transition, or even healthcare, like you've mentioned before, are offering really the strongest foundations for long-term value creation?
Well, I think given what's happening in the world today, you can't miss on AI and digital infrastructure, not because it's the hype, but I think when you start thinking about strategic capital, it first goes into the foundational layer of the economy. And I think no one can neglect the value of AI and digital infrastructure today. And it's about compute, cloud, data centers, cybersecurity, which touches every aspect of the economy today. So definitely AI and digital infrastructure is one of the top when it comes to sector lenses. I think the second, given being in the region, is energy. And it's not only about energy transition, it's about grid modernization, about storage, water, especially with hot climates where we are today. I think healthcare, given the aging population, chronic diseases. So I think healthcare comes at the forefront of that. Plus other aspects when you start looking at food security and all that. But I think if I were to pick one, I would probably pick AI and digital infrastructure.
Absolutely. I think the transition we've made is now proving to everyone that AI is here to stay, and it's a good long bet for every investor. Now, I have a question for you all. Given everything you know about the MENA markets, what investing mindset must change in order to capture that long-term value that can be found in the region? Naif.
Start with Mohamed again.
Well, I think the mentality of coming and extracting value from the region, it's not going to happen again. I think you need to come in, you need to deploy capital, you need to have a long-term vision, you need to have the view of partnerships in order to be able to deploy capital strategically in the region.
Okay. Who's ready with an answer?
Like,
Who needs more time to think?
I will do that. From founder perspective, Mohamed, you mentioned growth laboratory. If we can, as a founder, and supported by our investors, to have R&D laboratory, that will make the growth more sustainable and gambling. But this have two sides. Either it will go triple or 10x, or it will go to zero, but not affect the entire company. But that's need cash to be burned. That need an accepting to go all the way with the investor. Like, we'll have a funding round entirely for R&D, for XYZ, and this is the financial out of it, speculation. This is the plan. How many investors will support that in the region? We still don't have that.
True.
Michail?
I guess from an asset allocator perspective, regulatory certainty is very important. That's why, by the way, you see ADGM, you see DIFC is actually flourishing within the middle market space because they established that market certainty, regulatory certainty. So enforceability is there, bankruptcy is there, common law also help attract institutional business to the founder place. I think this is starting to happening across different parts of the GCC. For instance, like Saudi is now also done it very well. But I think the combination of sovereign funds, dry powder, putting money into the ecosystem, moving from international investment into local infrastructure investing, along with strong regulatory reforms, I think this is the perfect storm for investing in the middle market. And that's why, by the way, Emirates ENBD has always been conservative. And this is for the first year we're starting now the private asset business. We've been doing business for the last 20 years. And that's the only year we started discussing going into the private asset space because it's a perfect storm. Regulatory environment is strong, and also sovereign funds is trying now to pour money into the local infrastructure.
Well, you heard it here first, ladies and gentlemen. The future looks bright for the MENA markets, and whether you're a founder or an investor, I sincerely hope that you keep on bringing that conviction to the work. And I hope we see these ecosystems flourish. Thank you so much.
Thank you very much.
Pleasure. Thank you.
Thank you.
Thank you.